What's going on, guys? Bryant here. Today is Saturday, July 20th, 2024. There's a lot to unpack, so I'm doing two videos. This first one, we will be looking forward to the upcoming week, and then in the second part of the series, we will review this week's previous price action. If you're new to the YouTube channel, subscribe and check out the previous two videos in which I have been recapping the daily price action that has occurred. That will provide a little bit more context to some of the things in which I will be addressing in this video. You guys know I like to look at the upcoming calendar before coming up with some sort of game plan for the week. There's nothing too major on the calendar right now. We have Powell scheduled to speak in the middle of the day on Monday, and then we have some retail sales pre-market on Tuesday. It is the midst of earnings season, however, so this is pretty significant to take note of. After the close on Tuesday, we have Tesla and Alphabet, aka Google. These two are probably the largest mega caps on this list. So we can say from Wednesday, Thursday, and Friday not to expect much regarding major catalysts. It looks like before Wednesday's open is where we can expect some sort of increased implied volatility. If we head back to the daily time frame, we can see that the market has finally had some sort of a pullback here. As mentioned in the previous video, on the NASDAQ, the 50-day moving average was pointed out. We can see that on the SPY, the 50-day moving average is now starting to come closer and closer to price action. So this is definitely a level that you will want to have on watch. If we head over to the Qs, let's take a look. We can see how close price is finally getting to the 50-day moving average. And we have a gap right below here. So this is something to just take note of. 470 is a pretty important area on the NASDAQ. And on the SPY, we can see that just looking at price action right here, this area is pretty important to have on watch, which is 42.50. This chart is pretty clean right now, so let's just mark it up with some technicals. The first thing to take note of is obviously the pullback, but let's see if we can draw some sort of channel on this chart. I like to draw my channels connecting as many points as possible. A purist might say you have to use the exact low and connect to the next exact low and then draw it out that way, and then you'll have some sort of channel that might look something like this, and we can see that there's still plenty of room down to go. I don't like to draw my channels or trend lines out that way. I like to draw my trend lines trying to encapsulate as many touches as possible. What I mean by that is for this current uptrend that we've had in the market here, this is where it started from, but instead of starting from the exact bottom, I will loosely use around here because I want to touch this candlestick here. I also want to touch this one, and this one, and then obviously connecting it to this here. So as we extend this out, we get something that looks more like this, and then I'm just going to drag this and try to cover the top right there. So the reason I would draw it out this way is first, I'm trying to cover as many of these daily timeframes as possible. And this trend line, in my opinion, is a little bit more accurate for an upcoming play or putting together some sort of game plan for the upcoming week. We can also see the confluence right here on the chart because this is our potential support that's coming up. It's a little bit closer to where this actual trend line might come into play. Having a trend all the way down here to me is not that significant. For now, it doesn't mean that I won't draw some sort of secondary trend line on my charts, something like this, and then extend this out. And this is just more of the purest way of drawing the trend. So maybe make this something like solid, change the color just so I have it in the background and I'm aware of, but I don't like to have too many levels or lines on my charts. So we will clean this up. I just wanted to bring that to you guys' attention to be aware of. So what we have right now is this channel. Price is coming down to the lower end of this channel. And one possible scenario or expectation would be that if price was to come down to this potential demand zone right here, let's just say the 50-day moving average rises up a little bit. We get a little bit of a wick below this channel. Price closes above it. Maybe price bounces back up and we come back to the ever important strike of 560. That is a very likely scenario in which I can see playing out. I would not expect price to just slash right through all of these levels. There is a gap on the chart right here, so I am aware of that, but I don't think it would happen in one straight shot. If it does, I think it would create a very great opportunity for a relief bounce in which I would trade right back up to this 550 area. No one knows what's going to happen in the markets. The point of doing this type of preparation for the week or even doing a video like this is just to have some sort of a game plan and to be able to visualize possible scenarios that can happen. So when price action provides some sort of confirmation and a little bit more context, we can be a little bit more prepared. It's the same thing like before a game starts. You don't know what your opponent is going to do, but you can prepare by A, practicing, and B, visualizing what might happen, which can reduce a lot of anxiety. And at the end of the day, it allows you to be a little bit more prepared, which can improve your performance. Let's take a look at the NASDAQ because tech has been very important and we are in the midst of big tech earnings. Let's see what we can draw out on this chart here. So with the same logic, we're coming around to here, going to try to connect as many of these days as possible, and then we can draw this out and then connect the top points here. All right, so what we have here is we can see that the NASDAQ has obviously had a deeper retracement and deeper pullback from the all-time highs. The 50-day moving average is closer to current price action. We're drawing out a similar channel right here. We can see that the NASDAQ is at the bottom of its channel. We can see that it has already touched this area here. So this is going to be something to keep on watch. I would expect there to be some sort of a battle for price action between bulls and bears in this area. Volume was pretty elevated on this pullback this week here. The last time we had volume of this significance, we can see it was this day. So if we get some sort of large hammer or some sort of long tail doji candle or something like that this upcoming week, that can be a good level for bulls to go long with a stop below this level. That's usually how you trade a trend. So if this is the new low for the next leg up in this trend, seeing a candle like this would be great. Seeing candlesticks forming like this would also be great. We'll just have to wait and see. And obviously, earnings is going to play a big part in how a lot of this plays out. The general elections is coming up later this year, so the market is going to start trying to prepare for that also. Let's head back to the SPY. And let's start drawing out some support and resistance levels on this chart now. So we pointed out this level here. Let's point this level out here. I'm going to then draw a zone just around this area. There's a lot of wicks in this range, so I just want to make sure I have this area marked off on my charts. Same thing with right up here. We can see that this was a significant strike right here and right here, so let's just draw that out on our chart. So we kind of have a range. We can say that it's 50, it's about 40. These are some key zones to be aware of before we get into the gamma exposure and something a little bit more advanced. If we take a look at this on a smaller time frame, we can see how a lot of this plays out. So we have this zone coming down to here, which I think is going to be very important for price action if the SPY comes down here. It's important just to take note of the type of candlesticks that are forming. If it's starting to look pretty choppy, then that can be one sign that the current trend is coming to some sort of a halt or potential reversal. In terms of the current trend that I'm referring to, is the current downtrend from last week. It looks like things have stalled out here, and that might lead to some sort of choppiness as the market awaits the catalysts that are on Monday and Tuesday of next week. Let's head over now to the gamma exposure. So this is the upcoming week for the SPY. So some key strikes to be aware of. I like to consider this more of an X-ray view of the markets. If we're taking a look at the price action that we see on our charts, this is looking at the market in 2D, and then this is looking at it in 3D. So what's under the hood? Right off the back, I can see that there's a nice gap in open interest right here. So this is the current closest strike price to the last traded price of the SPY. And we can see that we're below 550. If the market was to get above 550, there's still a decent amount of negative gamma in this area. However, there's not a lot of open interest relative to these strikes up here and relative to this strike. So I can imagine that price would move pretty freely through this area. So in other words, if the SPY can hold above 50, it's not that unlikely that it can make it up to 55. I can imagine that it would stall out in the halfway mark, as this strike price right here is usually where we see some sort of choppy price action. If we scroll down and take a look at the gamma exposure, I would expect there to be some sort of support at 48 and 47. These two strikes look like support to me. If we get over 50, then I imagine this being support, and this whole area can act as some sort of a launch pad for price to head back up to 56, and then ultimately 57, which I still believe is the gamma flip strike. So if we head up right here, yes, 57. So that was addressed in the previous videos. If we take a look at it from the perspective of the futures, we can see that we have a massive potential demand zone right here. There is this weekly virgin POC right here. So what I mean by that is my settings. This is a free script, by the way. You guys can access it in the link in the description to the quant trading app free studies. This I just have set to weekly, and it's just going to put together the weekly profile for the full week here, this week here, and then this was this past week. Price closed outside of the high value area. So maybe it wants to return back to retest this 5600 level. It may use this potential area of demand as a place to build up strength and then return back up to here. I can easily see a scenario in which price comes down to here, it bounces, it puts in a 50% retracement, and then we head up here later this week. If price breaks down below this area, that's where things can get pretty ugly. And if that happens, I will more than likely not be shorting, as personally, I would just start to look for some sort of bullish divergence to get long, as I think things will be a little bit overextended. I don't like to short after price has already made some sort of a deep retracement. Let's take a look at the NASDAQ for reference. We can see that the NASDAQ closed also below its value area. These zones were addressed in the previous videos. I just decided to draw this one out for this video so you guys can see as another potential demand zone down here. There is a zone here, so I guess we can mark that off on our chart. Let's just duplicate this. And this is a high value area. Also, a lot of volume traded in this zone. We can see right where the NASDAQ stalled out on Friday. So there's the possibility that it might be difficult for it to continue selling. If it gaps down below this area, then that would be pretty scary. And then I can imagine a scenario in which it definitely heads down to here. However, it heads down to here, that means we would be hitting the 50-day moving average. Price will definitely be very extended. I imagine it would offer a really nice scalp trade back up to here, possibly 500 points on the NASDAQ. That would be a monster trade. So another possible scenario, it's just important to be aware of these zones. Lastly, let's take a look at the SPX. All of these levels, by the way, pre-markets on Monday, they will be updated as the new options data is released. So I'm doing this video a little bit earlier just to give you guys some more time to be prepared for the upcoming week. But just know that these levels are not going to be entirely accurate, as come Monday morning, everything will be updated and refreshed. Regarding confluence between the SPX and the SPY, we can see that 5,500 is obviously the very dominant strike. We can see potential support right here. This is the 485, so 5,485. So we have 485, we have 500 as potential supports. That kind of coincides with what we're seeing here on the SPY with this area of 48 and 47. If price can reclaim 5,500, similar to the SPY, we can definitely see price heading up to 550. And then meeting some sort of resistance or struggle up here. In this area here is where volatility will be suppressed, as the market will enter a net positive gamma environment again. But while it remains in all this negative gamma, there's a high possibility for large swings intraday and overnight. If we were to look forward past just this upcoming week, a trade that I would consider running now that implied volatility has increased would be something like an iron condor or an iron butterfly. If I'm going to run a longer DTE income trade like an iron condor, I usually like to look at the gamma profile for the next 48 to 60 days or so. And that's what I went ahead and checked off these expirations. So just before the September OPEX, submitted it, and then this is what our profile looks like. I'm just going to jump right down to the bottom here and take a look at the absolute gamma range. So I have this turned on. So this is just going to show us the absolute gamma range for this time frame. We have 520 as a significant level all the way up to 570. So I went ahead and drew up an iron condor that's pretty similar to that on the SPX. It's not a direct translation, but this is something I'm considering for a swing trade. When you're running a 45 / close to 50 DTE iron condor, by the time Monday morning opens, this won't be a 48 DTE. If I decide to run it on Monday or Tuesday, it'll be around a 45 to a 47 DTE type of trade. This is usually my go-to for longer DTE income-based strategies. If we were to base this around the 21 DTE as an expected hold period, so we'll say the Friday here of August 9th, implied volatility will likely decrease if the market was to consolidate for a bit. So let's just pull this down just to get an idea of a gauge of what we can expect. The all-time high is around this area here. So if the market is hovering around the all-time high, this spread will be break even. If we were to go down to the 50-day moving average, break that level, and then continue to sell off, the market will be around this range here. So if we head over to the chart, and let's actually head back to our daily, let's see right here, and let's actually head over to the SPX. We can see we have the levels would be 350. The short strikes we're looking at is 200, so it's below this pivot area here, and we're selling calls that are above here. So it's a pretty decent range, and obviously this is a decent amount of credits to receive because implied volatility has jumped up a little bit. The deltas on this strategy are about 0.15, and then on the call side it's about 0.16 here. If you've noticed, the distance between the long and short strikes are more narrow on the call side. That's just to create a structure in which we're not at too much jeopardy if the market was just to rip right back up to the upside. By doing so, it is softening our delta. So in other words, if I was to pull this down and let's just say we made it entirely the same, you guys can see this deltas are a little bit too negative. So if the markets did recover and went back to the all-time highs, this trade would be in jeopardy. So we pull that in just to kind of pull the delta down, get it to a level that's a little bit more neutral. Let's reset the volatility, and we can see now if the market was just to rip back up to the all-time highs, we'll say by the middle of this week here, this trade won't be in that much jeopardy. The likelihood of the market selling all the way up to 5,300 and not bouncing is pretty unlikely in my opinion. So if we did come down to 5,300 and then a few more days pass by and we bounce back up to this area, we'll essentially hit the profit target for a trade like this. I like to aim for about 7 to 10% on this type of iron condor. And this is in reference to the percentage of your max loss, which is pretty much your margin. So if you're using $2,000 in margin and you're looking up for a 10% gain, you do the math on that, you can see that you're aiming for about $200 in a trade like this. So in other words, if we were to use the 21 DTE as the profit target, 10% of that would end up being about $200 on the trade. And that would be a great profit target for a trade like this. So this is something I'm considering running for myself here this week. I like to scale these up to a manageable size that I'm comfortable with, but obviously depending on your account size, you trade accordingly, and obviously you manage your risk accordingly. I'm looking at the iron condor largely because we've had the bump in implied volatility, and I want to take advantage of that. I like the gamma profile that I'm seeing here for the upcoming weeks. I like what I'm seeing on the SPY. If you enjoyed this video, let me know in the comments down below. The gamma exposure that we're looking at is from Quant Trading app. Thanks for watching, guys. Like the video, share it if you learned something, and I'll catch you on the next one.